The Dow giving up most of a 700-plus point gain as investors digested what a better-than-expected inflation report could mean for the Fed's decision tomorrow. After dipping into the red a few times during the session, the index closed up just 100 points. The Nasdaq fared somewhat better, rising over 1%, though it had been up nearly 4% at its highs of the day. The S&P also holding on to gains. But take a look at the move in treasuries. This is interesting. The yield in the 2-year falling to its lowest level in over 2 months. So how does this all tell us ahead of the Fed's decision tomorrow? The 10-year yield guy also moved lower, and the dollar index had a big move, too.
Yeah, and I think the last day and a half, at least yesterday and half of today, is what Steve had been talking about in terms of this face-ripping rally into year-end. You saw glimpses of it, obviously, this morning when the S&P was up 120 handles, seemingly, in my opinion, just in a flash. What does it say? Well, let's just break it down quickly. 10-year yields going lower suggests a market that's slowing down. It does not suggest that the Fed has your back. I don't think they do. And to your earlier point in the tease, you talked about maybe interest rates in the Federal Reserve shouldn't be in our purview anymore. You're probably right. It should be about earnings and earnings growth. And this market, to me, does not have the wherewithal, does not have the tailwind to get you the earnings and the earnings growth you need to actually have a commensurate multiple level at 18.5. We should be at a lower multiple level, and we should be anticipating lower earnings, which to me means the market goes down from
Can
here.
I insert this one thought?
Absolutely. Your show.
That's true.
For a long time now.
Like more than a decade. Anyway.
Yeah.
What if soft landing is much more possible? What if this deflationary trend now, because it's not just October one-off, it's an October plus a November and then possibly some more, signals that we are going to have a soft landing. And so therefore, earnings estimates don't have to be ratcheted down so much.
Listen, the stock market is telling you the base case is for a soft landing, right? And it's telling you that on the next dip, the next retest of those recent lows from October or whatever, that we probably hold, because at that point, we kind of discount that kind of earnings drop off that guy's talking about here. Rates have kind of come down. We know that the inflation readings are coming down. I mean, that's kind of the base case right here. I guess, and I've said this a little bit. I mean, Steve, you've had a nice call. We're 17.5% off the lows. I don't think any of us were pressing the lows back in October. The sentiment felt really bad. The difference now is that sentiment is too hopeful, right, at this point, when you think about the fact that, yes, we've had these rate increases. The pace of the rate increases is slowing down, but the rate is going to stay high. And then all of the other effects working in the economy. I'm no economist, okay, but I look at markets. I've been doing this for a bit. We all have here. And really with this S&P where it is right now, right around 4,000, does not encapsulate, in my opinion, what is likely to be something a little worse than the base case scenario, or at least the fear has to work itself into the stock market. It's just not there.
What happens if we don't stay higher for longer?
What do you mean?
So that's the base case right now, is that we're higher for longer.
Right.
But what happens if inflation comes in precipitously?
And then we pivot, the Fed takes it back, or we just
I think we could stay, when you say higher for longer, I think we could stay higher than zero. But I don't think we have to stay at 4.5, 5.
Well, Powell's saying that, though. Isn't that what he said last week at Brookings? He said, I think what you guys are misunderstanding is that we're not going to pivot or this. We're just going to leave them up here. You know what I mean? So we're going to stop the increases.
But leave them up here at 4.5, 5.
Yeah.
What I'm saying is, what happens if they don't leave them up there at 4.5, 5? What happens if they leave them up there at 2, 2.5?
But then you're saying that they do pivot and then remain high.
They're going to, because if you look at these inflation swaps, they have the Fed funds rate being higher than inflation by May. So if that's the case, then the Fed doesn't have to raise anymore. We're so close to it. So if they don't have to raise, they leave them at 4.5, 5 for a bit, the market turns, then they could start cutting rates pretty quickly. So I don't think anyone's thinking about that just yet.